Hello and welcome to Tokenomics. I'm Anisha Gupta. The crypto winter has been with us for a while now, with even institutions and miners selling off and Bitcoin going below $20,000 mark at one point. Globally, the volumes have slid, and despite Bitcoin regaining the 24,000 mark recently, the Indian markets has also been sent into a tizzy as of late, with the Enforcement Directorate accusing WazirX of assisting Indian fintech firms in money laundering. The ED scanner has also been on 10 other Indian exchanges, lending further fears to market participants. So it's no surprise that this uncertainty has led to trading volumes in India declining by more than 50% in the last week as well. As the regulatory and tax uncertainty not only in India but globally continues to plague the markets, how long will this crypto winter last? To take this discussion forward, we have with us Ms. Nappinai, S Nappinai, who's an advocate, and Vignesh Raja of the H-Bar Foundation. Thank you so much for joining us. And Ms. Nappinai, if I can start with you, there are plenty of problems when you look at cryptocurrencies, right from the regulators talking negative about it, a lot of skepticism, and what you did not want is the kind of scenario that we've seen evolving in last week or 10 days. 10 crypto exchanges is what ED is eyeing at right now. There have been sent summons. There are, conversations and surveys being done on various of them. How would you read that? Is this lack of clarity, lack of regulation, or is it just a free float market and the concerns because of that?
Manisha, thank you for having me here. Actually, this situation that you're seeing today dehors all the other problems we've seen with respect to crypto till now. Forget about the kind of skepticism and the fear psychosis when it comes to cryptos, the lack of clarity and certainty because of lack of regulation, etc. Here is a new situation that this recent series of ED raids, here is a new problem that has been highlighted. Now, primarily from whatever news reports I've seen, it appears that these raids were predicated on certain off-chain transactions that have been taken by some exchanges. Whether the exchanges have in fact indulged in off-chain transactions or not, and whether that amounts to a violation or not, is something that only investigation can bring out. But in terms of a legal interpretation, assuming this to be correct. Now, here is the problem with this kind of a transaction. The first and foremost is off-chain means that you want to avoid blockchain and the transparency that it brings, and you do it almost like a paper transaction which will not have that accountability. So technically, it may not be off the mark for ED to claim that it is on par with Hawala transactions. And therefore, it assists money laundering. And therefore, the raids and possibly prosecution. Right. Now, this is something which has nothing to do with it being crypto or otherwise, because the minute you try to do something without the necessary transparency, without the proper KYC norms being adapted, where certain things may be just paper companies or fronts, etc. Now, all of these are indicative of something beyond the ordinary. And each of these lend themselves to the possibility of crypto being a means of laundering monies. And in this instance, the accusation also appears to be that monies which were, there are two separate parts to the transaction. There is a scam that has happened with respect to these Chinese loan apps, etc. And you have the second part, which is crypto as the means of taking the money out of India. So each of these individually can amount to crimes, and combined is just a stronger case in the hands of the enforcement agency.
Clearly.
So given this problem, that crypto is the basis for siphoning out money just makes it worse for the domain.
It sure does. So, there are two aspects to it. And as you were explaining to us, one clearly is about money laundering. The other is about FEMA here. And you mentioned about KYC and a lot of loopholes that we've seen happen in this space. What does it all really mean for the investors? Because the latest report from UNC-TAD tells us that nearly 7% of Indian population does own cryptocurrency in some sense or the other. What does it really mean for them?
It's really bad news for them on money fronts. The first and foremost is if the investors have sought for off-chain transactions, then they themselves are in violation irrespective of the exchanges. And they are in violation on multiple fronts. I also wanted to add, even in the earlier instance, that off-chain means that you're probably then circumventing the tax that the Indian government has now imposed on these kind of transactions, these kind being crypto transactions, right? So if the investor has asked for off-chain and consequently they have also participated in the process of tax avoidance or tax evasion probably, then that leads to another layer of a possibility of prosecution. And finally, if an investor has just been doing their regular trading and using an exchange and had nothing to do with all these off-chain transactions, and yet because of the freeze that ED has brought in, now there the investors do have some remedies, but that is likely to be predicated on what the terms of their contract is with the exchange that they have been using. If it is in terms of remedies from the exchange, if it is in terms of other processes such as a prosecution, a criminal prosecution, or other forms of remedies, that's where it gets into the gray area, where general laws can be applied, and it can be. There is nothing in law which says that crypto is not part of the legal framework unless otherwise said so. You know, special laws are meant to provide for a domain with which has certain kind of complications that the domain brings in. Sure. But in the absence of special laws, you can still rely on general laws, and investors will have to look at, one, their contractual terms and the remedies available under general laws, be it civil or criminal prosecutions, and they can definitely try and seek recourse under these.
All right. So, yes, things are not getting easier. You know, last year it was all about on how do you pay taxes and how should you show it in your balance sheet. And then came the higher taxes at 30% of crypto tax, 1% of TDS. And then the kind of sell-off that we've seen in cryptocurrencies, the kind of layoffs that we have seen globally, and then the Indian markets as well. All of that has brought about a freezing of accounts for WazirX and Vault, and there are summons being sent to various other exchanges also. When you look at the kind of view that we have in the Indian markets with crypto, what's your sense on what is ahead of it? There are people invested, yes, but any new investors, would you encourage that at all?
Now, there are two kinds. The ones who have already invested also are in a bit of a difficulty because of the lack of regulatory frameworks. So I have always batted for regulation for crypto and for certainty in terms of government's position. Because unless and until government expresses its mind, not just in terms of general statements or cautionary notes as what RBI has been doing, but with parliament enacted laws and rules framed thereunder, unless that happens, there is no certainty and there is no safety net for investors, old or new. Now, this is where we stand even today. And we go back, Manisha, I remember some of our earliest shows we have done. I think it may be 5, 7, 6 years back and even earlier. Yeah, but from 2013, the government has been straddling the fence in terms of crypto. You had your first cautionary notice in 2013, and beyond the 2016 notices, which then got struck down by the Supreme Court, you've not really had much progress. And after the strike down by the Supreme Court of the RBI notice for disproportionate, on the grounds of it being disproportionate, there has not been much action. We are still hearing about possibly a law, and unfortunately now it's diluted down to a public consultation. All this is not helping us, be it as investors, be it as users, be it as exchanges or people in the industry, or for that matter, be it for law enforcement. Because uncertainty also provides the possibility for crypto scams. Because when a scam happens, the victims are scared to approach the law enforcement because they don't know whether it'll boomerang on them. They are not even clear about what is the legal position today with respect to crypto. So for every stakeholder in this field, and for certainty in terms of what the future is about, and India is a huge, even if it's at 7%, when we are 1.3 plus billion, it's a huge number. So we are big players in terms of a global market, and certainty to ensure that we know where we stand with respect to crypto or not, tokenization or not, limited usage or not, is too relevant and critical. I do hope that we will see an immediate regulatory framework in the near future and not the distant future.
On Sandeep, hi. First off, we have seen a major crypto sell-off, not only by retail investors, but by institutions and miners as well. What do you make of this crypto winter?
Yeah, I think this crypto winter doesn't have much to do with the crypto specifics. Actually, it's more related to the macro environment that we have, like especially the Fed increasing the rates to curb the inflation. I think due to that, a lot of liquidity is being sucked out of the markets, and even not only in the crypto, but the stock markets have also suffered huge downturns in the last few weeks or months, you can say. But if you also see crypto specifically, crypto tends to overreact, whether it's on the downside or it's on the upside. So I mean, that's what happened, and then after that it triggered a lot of these liquidations in the C DeFi world, we call it, like, a bit of centralized DeFi. And then this whole 3AC episode also, put a lot of downward pressure on a lot of crypto assets, especially the top line crypto assets like Bitcoin, Ethereum, and the other blue chips, including Polygon. And then due to that, I think crypto had another further downturn, but I think most of those things are now done. But obviously crypto overreacted with all of this macro uncertainty.
It is an overreaction, as you said, has been seen from all sides. But, I want to put across a number to you. And the kind of investment India has seen in the first quarter of this year has been the highest that the market has ever seen. Do you see these investments sustained given the sort of tax, regulatory uncertainty that we are facing in the country?
The VCs are investing a lot. I expect them to be continuing the investments and kind of bring in more fundamental investments into this whole crypto domain. So I don't expect the Indian regulations to slow them down, because anyways, even though these were Indian venture capitalist brands, but most of them are investing from their external entities, which are not technically the Indian ones. But good part is that many of them know the Indian ecosystem, and many of the projects they are investing in are Indian origin, and hence you can technically imagine that this funding somewhere is getting into the Indian ecosystem. So that's one part, and I don't see that slowing down much, except the downturn. I don't think that regulations will have an impact on that. It's more of the downturn, and more of value investing is coming back into the venture capitalists globally in crypto, because previously it was kind of a FOMO, as we call it, like fear of missing out kind of investments that were happening. So now the value investments will come back into India.
All right, waiting for those kind of valuations. But, as I said, the concerns are plenty. And let me take some names here. We've seen accounts being frozen for WazirX. We know what's happening with World as well. So even when it comes to crypto exchanges, the volumes have continued to decline too. How sustainable is the overall business now looking to you in India?
The most important thing we need to do is we need to separate the crypto trading businesses with Web3 businesses, right? So crypto trading means these exchanges getting retails, money, and that in getting involved into the crypto, speculative markets, or even DeFi. So wherever the retail money is involved, I think government has put in some strong controls, and I don't see many of these businesses flourishing beyond a certain limit. till the time more clarity comes on those regulatory kind of covenants that government has put in. But the Web3 businesses, I am more focused on Web3 businesses who are like InstaDapps of the world and on Junos of the world, who are building the products which are global in nature, which are not technically Indian users or Indian retail products. They are global products. And including projects like Polygon, which are building infrastructure for global Web3. Those projects, I don't see them getting affected much with all of the regulation. It particularly affects applications or business models which involve money from Indian retail, and I think those are going to be fairly highly affected with all of this that we have seen.
Sandeep, I get your point. So it's all about Web3 and Metaverse, where we have seen a lot of investment come in. These are the areas which seem to be flourishing as well. And I take your point when you say that we should keep the retail investment and trading away and the technology away. So how are you looking at the overall space panning out in this year? And what are Polygon's plans going forward?
So, I mean, as Polygon continues to expand globally, now it's like we have, the Polygon, the Polygon Foundation has hired pretty extensively in US also. So a lot of push is going into the US markets, wherein the users and the laws are more friendlier and the users are more kind of educated on this, because they are getting into, or they have access to Web3 for last multiple years. So that's happening for most of the companies. But in terms of the technology and infrastructure, Polygon continues to deliver a lot of things. I think we are around 20th of July in ETH Paris. Polygon is releasing the ZK EVM. Polygon Hermes team, specifically Switzerland-based team, Polygon Hermes is delivering the ZK EVM, which is kind of a pivotal moment for Ethereum scaling.
Oh, well, yes. And, when it comes to crypto, there have been a lot of buzzwords over the years: NFTs, DeFi, yielding, Meta. Do you think going forward from here, it is going to be about consolidation of all of these verticals? And what's also your sense about Web3 then?
Definitely, you are right that all these individual revolutions like NFTs, specifically art NFTs, then gaming NFTs, and now celebrities and sports leagues getting into NFTs and all that. I think we will continue to see this fan engagement strategies with NFTs, and we'll keep seeing that, I feel. And then similarly for DeFi, with all this recent downturn and all that, the DeFi blue chips have come out even stronger. People can see that even this massive downturn, the DeFi, DeFi heavyweights can take that massive downturns. So that all went pretty well. I feel that, so basically what you are saying is that I feel that there's going to be more consolidation and continued growth on these individual sectors, which saw a lot of product market fit, and all of them will see the next level, kind of growth in all of their products.
Okay. Also, Sandeep, every second or third day, you see a name or a regulatory clampdown across world. How are companies like yours dealing with all this?
Crypto being, like semi kind of anonymous in nature, crypto addresses being semi-anonymous in nature. I think governments have a lot of legitimate concerns over there, and which I think a lot of geographies are going to bring in laws to protect retail. And I think the most of the good actors in the industry expect that to happen, and we think that that's overall positive for the industry. So in terms of the clampdown, as you said, that recently whatever we have seen is actually towards these players who were reckless in terms of their risk management and all that, like especially recent ones after this downturn. So you might see a few clampdowns on them because they were reckless with the retail money, and which is actually pretty legitimate from the governments to do it. But by and large, I see overall positivity in the space, and how companies like us or protocols like us are treating is as to become more and more buttoned up, as in, have global legal councils. Like Polygon is also, Polygon Global actually is getting a global CLO, chief legal officer, at a very senior position with, pretty extensive, pretty extensive experience on the global legal side. And we have got, like, again, global firms, helping and becoming or like helping Polygon, as well as a lot of blue chip protocols become more and more compliant.
All right, I get that. So, well, the retail money businesses may not flourish a lot, and getting legal opinion is something that all companies are doing. And the point is well taken that there is consolidation and there are various verticals to blockchain. So, it's not about crypto trading really, it is about the technology that would really do well. Sandeep Nailwal, thank you as always for joining us today. And with that, it's a wrap on this edition of Tokenomics. Thank you for watching.